Hey Scott, thanks so much for joining us today on the REI Marketing Secrets podcast. For those in the audience that are learning about yourself for the very first time, can you dive into a little bit why you got started investing in real estate instead of, say, investing in the stock market or these other alternative invested asset classes that are out there?
Hey Trevor, appreciate you having me on. My why on the built environment in real estate is just it's what I had exposure to. I framed houses in college. I renovated my house in DC, and it was just something that I was interested in and had exposure to. Some of the other investing things, I don't come from an investing background. I come from more of a management background in sales and a non-technical background in regards to real estate investing. Obviously, over the last 10 years, I've gotten that, but it wasn't something that I was not super interested in stocks, bonds, alternatives. It's just not. I like something I can touch.
Yeah, I couldn't agree more with you that was sort of for me where I'd been investing 401k, IRA. I thought that was really the only avenue that was out there, like a lot of folks when they come into investing. And I thought to myself, why do I want to keep investing in these individuals unless you're looking, say, a self-directed IRA, solo 401k, and things like that. I was like, I'm not going to be able to touch that money until what is it, 59 and a half. I want to I want to live for now, and that's why I got started as a passive investor. But for you and your company, what is the real estate asset class? Is there a certain asset class that you guys specialize in? Is there multiple asset classes? Just curious to hear from your perspective what your company, what your sort of your bread and butter is.
Our bread and butter is self-storage. We have some other stuff that's come in with some of the portfolios that we purchased, and there's a couple of RV parks that are more man camps that are more legacy investments. But for the 98% of our portfolio is all self-storage.
And for the self storage that you're going out and buying, like I'm in a self storage deal with a different operator, and the deal for them was below market rents. The operator running it hadn't raised rents on the units 10 years. There's a lot of land to development. So it's a self storage development deal. I've heard of other folks that go out and they buy Kmart's and they turn that into, self storage facilities. From there, when it comes to your company, what does that sort of look like? Are you developing these self storage facilities? Are you buying existing ones that have just been, maybe they don't have the new technology, or is it someone like going out and buying like a Kmart, buying the building and putting up the units? They're just curious what it looks like from your perspective.
We're full spectrum. So we buy existing deals that are operationally mismanaged. We buy deals that are mismanaged plus expansion. We develop from the ground up. We're converting a warehouse space to a self storage. So kind of all the above. Inside of Spartan, we have an operations team to operate the existing facilities. We have a development group that just goes out and entitles raw land, and then we also have a fully licensed GC that goes out and builds all of our projects for us. So we really can look at multiple modalities inside the self storage space.
And when it comes to self storage, obviously there's a lot of asset classes when it comes to real estate. You have your multifamily, your mobile home parks, including your self storage. Why self storage? Why do you like that asset class as compared to some of these other asset classes that I just mentioned?
So I don't have any experience with the other asset classes. So going into office and industrial that are very, very established, just not something that I wanted to do kind of out of the gate. As far as the multifamily goes, not a big fan of people. I don't like anything that has a lot of government regulations, and multifamily is that, right? It's very hard to evict. It's very hard to raise rents. It's very difficult to do those things. It's profitable, and multifamily is a great asset class for the right person. It just wasn't for us. We like self storage because it's easy to evict, it's easy to maintain, and as an operating, it's a little bit harder to operate than some of them, but with dynamic pricing and existing customer rent increases, it's easier to drive revenue quicker in a self storage facility than it is some of the other asset classes, which are tied into longer leases.
Yeah, and I definitely agree with that. And for me, as a passive investor, I never really had an interest being in the active side. Just given my personality and have enough going on, I'd rather be a passive investor. And when me and my wife, we were moving into our house, where we stayed with our in-laws for about 2 months, we moved out of our apartment, just got married, had all of our wedding items, put that into self-storage, and it was so easy. It was went online, got the unit, paid for the unit, and then when I moved out, just canceled that. It was like a month-to-month contract, and I was like, this is so simple. You don't have to deal with any tenants other than the folks that are putting their stuff in the units. And obviously, like you mentioned, a little bit easier to evict than multifamily. I know being in New York, evicting when it comes to multifamily, I mean, it could be quite the headache. I mean, you could be looking at 6 months, 12 months, longer, depending on which jurisdiction you're in. So that's just to say, I think that's another reason why self storage has really caught my attention as an asset class. With that being said, have you noticed any trends in the self storage, I guess, area over the last year or so? Have you noticed with, say, with the economy creeping up in price, have you noticed like occupancy rates down or anything like that? Or, is it business as usual? Has anything taken a hit? I mean, you look at the multifamily space, it's pretty crazy what's been going on in that space with folks defaulting on their loans, and it's just not a good space to be in unless you're a really established operator. But when it comes to the self storage, have you noticed anything like that, or has it been pretty much business as usual?
No, I mean, like we've definitely hit headwinds, but I think they were headwinds that were coming off of kind of a turbo for COVID. So that those headwinds are bringing us back down to reality. I think one of the big differences with self storage is kind of our dynamic pricing. So we can move
Hmm.
pricing pretty fast. There is a concept of existing customer rent increases that I think really exists in storage, and I really don't know if it exists anywhere else because of the dynamic nature of our pricing. We can raise rents whenever we want. Generally, we don't do that. There are some practical theories of how you do your existing customer rent increases, but we're kind of the dynamic pricing of the hotel guys, but the stickiness of the multifamily guys, because people really don't want to move. And most of the time, our prices are $100 a month ish. So a 10% increase is $10, right? So are
Yeah.
you really going to go pack up all your stuff in a 10 by 20 unit and move it down the street to save $10? Probably not. Now, I think there is a balance between that and not getting kind of over your tips with the customers. But yeah, I mean, like overall, the self storage industry has softened a little bit. We're really affected by the lack of people moving because, as you just
Hmm.
mentioned, it's usually people moving that generate some of our occupancy and some of our rentals, and those have come down. The good news with storage, though, is that it really wasn't, it didn't have access to some of the agency debt and some of the like absolutely bananas debt that the multifamily guys
Hmm.
had, right? Just wasn't there. There was no government debt, there was no agency debt for us. So we have not seen, not yet, anyways, the kind of the level of distress that we're starting to hear about kind of in the multifamily space or the office space or whatnot. So it just hasn't been there.
Yeah, that's excellent to hear because I find in the multifamily space, just folks just not getting cap rates, or and just their interest rates just jumping on them, getting certain bridge loans, not completing the property fast enough, and they should go to refinance. And it's just been a total nightmare. So I'm glad I'm only in one investment in multifamily, and luckily it seems to be doing well. But I have a little bit more faith and confidence right now in my self storage deal that I'm in. But with that being said, like if I'm looking at, say, a multifamily deal, for me, I'm just looking at like more your red states, like Texas, Florida, Georgia. When it comes to your self storage facilities, is there like certain parts of the country that you look into? Is it the Midwest, or do you just go really wherever you find a good deal and it makes the most sense?
Yeah, we don't really have to worry about the red states per se because we don't really have to worry about government regulation for
Mhm.
the time being, anyways. Things could always change. For us, the self storage does well everywhere. We don't generally do a lot of deals in the Northeast. We stay away from New York and Illinois and California just due to the business climates. Some of the Midwest states are harder to make deals work, but there's still guys doing great there. So there is no magic bullet out there for what market you should look at or like stay away from red states or this or that. It just really, I mean, self storage does well everywhere, and you don't have to worry about regulation at least as of yet.
Yeah, that's excellent to hear. And that's another reason I don't invest in New York. There's just too much going on here. It's also why I don't want to be active in this state. I'm just looking to be a passive investor. But let's say someone's listening to this conversation and like, hey, this is great what Scott's saying. I'm thinking about booking a call with this company just to learn a little bit more than say the surface level of what we're going over in the interview. What does that look like from a call standpoint when someone's booking a call with your company? Is it yourself? Is it like an investor relations team? And when you're on the call with someone, what does that sort of aspect look like? Is it just getting to know the person, their investment background? Just curious from your company's perspective on how you sort of handle that prospective investor call.
We have an investor relations team, and my partner actually does all the investor relations. I don't do many at all. I will interact with some of our top investors, but that's it. Ryan Gibson, our chief investment officer, really is the one that leads that team. And we have a team of like investor relation reps, in which if you go on and you book a call, you'll end up talking with Ted or Rob or Jack to have an initial conversation so that we can get to know you better and understand your investing needs and what you're looking for and what's important to you. So that way we get you access to our portal, and then you can go on, and when you see a deal that you like, you can engage us and go from there.
Yeah, that's perfect. And let's say myself, I speak to someone from your company. Maybe I have 10 grand in the bank, just working my way up over the next 3 to 6 months to invest with your company. And let's say you have a deal 50K. Now I'm finally at that 50K mark. What does that sort of communication look like from the time that, say, I speak? Let's just say I'm speaking to you I'm speaking to Scott. You're the investor relations manager. I know you mentioned some other people on your team. Just being hypothetical, I speak to you. Now I'm ready, like 6 months down the road, to invest. When you're putting these investments together, do you have like a fund model that you're just constantly, bringing in additional investor capital? Is it on a deal by deal basis? Just curious what that looks like. Because for me, I've found that I've talked to operators and sponsors before. I want to invest with them. I don't have the cash just yet. I have the cash 6 months later. They don't have any deals for me. And then I kind of lose interest per se, and I find another operator where I can put that cash towards. But from your company's standpoint, how often are you bringing in this additional investor capital for these deals?
So it depends. We have funds and we do individual syndication, so we do both. When we have a new deal, we do have a webinar that we push out. If somebody calls and they're not accredited, then we don't do active follow up. They'll get messages to say, hey, like we have an upcoming deal, but there's no active follow up in that regards. So that we do, like, there are folks that fall off. All of the like operators have the same boat, that they have a conversation and the person's not ready to invest. And people stay on our list and they see our deals, they see what's going on, and then they can make the choice when they're ready to come in.
Yeah, that's excellent. And then now let's flip the script. Say someone has invested with your company. You had a deal opening and it just made sense. It was what they were looking for. They invested, again, I'd say 50K into your company. At that standpoint, what does that sort of communication look like? Do you give monthly reporting? Is it quarterly reporting? Is it like one of the sponsors I invest with? They do, like, I think it's biannual. About every 6 months, they do a webinar on how the deal is going. Just curious from your company's standpoint what that looks like.
So we do monthly updates. So you can log into your investor portal and you'll see all of the monthly financials from your investment. There will be a kind of a summary of kind of what happened. And then once a quarter, Ryan goes through all of our deals so that somebody can join a webinar and get on and see kind of the whole full spectrum of what's going on.
Yeah, I really like that. And I find that I think 2 of the 4 deals that I'm in, they do something similar to that. Well, they'll do like monthly reporting, and then they'll do a broad spectrum of all these other deals that are out there through their company that I can invest in. And obviously, if I'm watching the webinar, I already like the deal that I'm in. I'm not going to be wasting my time thinking about investing in the other deals if they're not doing a good job. But with that said, Scott, I'm just curious if someone isn't, interested in investing in, say, Spartan Investment Group, what are the benefits of investing with your company? How long have you guys been around? Is there a certain amount of units that you have, access to right now? Just curious what that looks like.
Yeah, so I mean, we've been around in the storage space for probably 2017. So what are we going on? 6 years now. We were doing single family homes before. I think that we do a good job communicating, whether it's good, whether it's bad. We're fully integrated. We have our own management in house. We have our own acquisitions team. We have our own capital team. We have our own construction team. So we're fully integrated. So from our ground up deals, probably mitigate risk a little bit better than some of the other folks out there because we have a construction team internally. So the probability of them walking off the job or screwing us with change orders is pretty low. But there's a lot of good operators out there, and I highly recommend investors kick the tires. It is more important to fit with the team and understand their values. I always tell LPs, like, don't chase returns, like
Hmm.
don't chase pro formas. Like, it's like pro formas are a best guess on what we think is going to happen. So don't chase the deal. Figure out the operator, figure out the team, like understand their values, understand where they're going to go, and that's who you pick with. In a lot of that's alignment, right? So if you get with a team and you don't like their values, then don't invest with them. Move with a different team.
Yeah, that's spot on. And I look at that for me when I was looking at these deals and talking to these sponsors. It's almost like first I want to get comfortable with the jockey, and then I was going to bet on the horse, which would be their deal. So if I hop on a call with someone, I like what they have to say, I just feel we have a good synergy, then I'll take a look into their deal. And I think you sort of second that, where you want to make sure that you're getting along with the operator and you like what they have to offer. Because again, the numbers can change on that pro forma. And unless I'm taking a look at the pro forma and those numbers are just out of this world, I'm like, I just don't think that's going to happen. It's almost like they're overselling the deal. I get a little too scared at that point. But Scott, it's been great talking to you today. And if someone is interested in investing with Spartan Investment Group, where can they find out more about your company and even more about yourself?
Yeah, they just head to the website, spartan-investors.com, and all the information's there.
Perfect. I'll make sure to include that in the show notes of today's episode. And again, Scott, thank you so much for coming on to the show.
Trevor, appreciate you having me.